Well, g'day there everybody. Thanks a lot for joining me as at this Thursday afternoon market recap. I hope you are doing well. A lot to speak about over the past 2 to 3 sessions. Once again, the Dow Jones Industrial Average is pulling on back down to this very important critical pivot point around this 24,000 handle. You can see that we closed just slightly below this 23,930. However, what I want you to pay attention to as at Thursday is again this pronounced long lower wick. This is very similar to the candlestick that set up on Tuesday, and this is also tagging those lows which we established in late March into early April a couple of weeks ago. So this is very important. This is what we call really essentially a critical pivot point. This is, in other words, a turning point. Either the markets are going to stabilize at this pivot and begin to bounce as those oscillators begin to flick on back up, or we are going to definitively crack these rising long-term simple moving averages. Most importantly, the rising 200 simple moving average. Now, if you pay attention to my screen, you can see the Dow Jones Industrial Average intraday pushed below this rising 200. The 200 is sitting at 23,750. We did again close above it. We actually closed up positive, and what is interesting about this is essentially we have once again another hammer at support. So this is technically a bullish signal. Yes, we still haven't cracked this macro support area, which leads me to believe if the market can stabilize around this area, if we begin to build traction once again like we did during that period late March into early April, I'm assuming that this market is not only going to take out this high as we move towards the back end of May, but also potentially into June. We could see these markets all the way back up here at their respective January highs. On the Dow Jones Industrial Average, this is going to sit up here at 26,435. Now, I've already quoted, of course, these rising simple moving averages. If we look into the detail of the construction of the weekly candlestick, you can see for yourself that it is still a long day type of candlestick. We are considerably off from the lows, but you can see we're down 381 points on the Dow Jones Industrial Average over the past 4 sessions. But what is most important above all else is the continuation of these lower wicks. This is essentially buying pressure. And again, if we can hold above or very close to 24,000, as we see these oscillators come on back down close to oversold conditions, we should once again begin to see them flip, and then this may be a very quick push to the upside if we can sustain these current price levels. Now, the oscillators themselves are a little bit mixed. You can see the stochastics is pretty much in no man's land. However, the fast line is beginning to turn. The RSI is close to oversold conditions, and the MACD more or less is moving absolutely sideways. This is indicative of a sideways market move. Now, also, if I show you one other thing, you can see that we began to push outside of this lower Bollinger Band. Surprise, surprise, when we come down to support and begin to push outside but see these long tails, generally it also coincides with that of a temporary, albeit temporarily, market bottom. So we are starting to see that of bullish sort of signals begin to show up around this critical pivot point. However, if we begin to definitively close below this area, this is coming in at roughly 23,400. But then we've got the insurance policy down here at 23,278, which will take us on back down to 22,000. This is my absolute lowest target on the markets. I think we've already gone through that of a considerable correction, both in a percentage pullback and also during time. If you take into consideration the peak that was established back in late January, here we are in the 5th month of the calendar year 2018, the beginning of May, and we are quite considerably down, so to speak, year to date. We are down very close to 800 points on the Dow Jones Industrial Average. Let me just remove these annotations because it is a relatively interesting signal. This is the first candlestick, so to speak, on a yearly time frame where we do have a considerable upper wick. Now, what this is telling us is that on the larger sort of macro time frame, although we are still in that of a bull market advance, we are starting to see obviously sellers gravitate during the construction of what is the yearly or year-to-date candlestick up and around this pivot at 26.5 on the Dow to where we are currently trading at down here at 23,930. Now, again, in the past, I have spoken about, I guess, levels of the market, or at least what we need to see before we can progress. This is why I'm a little bit hesitant on the market coming down to 22,000. Really what you want to see, or really before you can pick your sort of longer term or macro direction on the market, we need to essentially close this window up here. Remember that this is going to act as a magnet moving forward. So essentially, I've been seeing really, I guess, the sentiment, or at least the narrative in the news media and the financial media, that this is a relatively bearish market. And yes, it has been, but what they're not picking up on is that we may be at the end of this correctional type of move, considering where these oscillators are and those rising 200 simple moving averages. Now, generally for a market to break these lows from where we currently are, we have to close these open windows. And that is essentially setting, I guess, the stage, or really the completion of what has been stage 1, so to speak, to get up here to stage 2 before we can progress down to potentially stage 3 at 22,000, or break above this resistance area and continue the larger bullish trend. So I just wanted to make that very clear. On the industrial average, we are not definitively, or at least the market itself is not definitively bullish or bearish. We are still holding support. And again, it really is a 50-50. There's absolutely, an incredibly strong sort of battle going on between the buyers and sellers, and we don't have a victor yet. I'm assuming there is going to be a victor relatively soon. I'm sort of siding with the bulls at this particular point, but above all else, there is an absolute battle going on around these pivots on these respective markets. The same is true, of course, for the S&P 500. This is sitting at 2,600. You can see once again a long lower wick. Now, this is technically a bullish signal. It's very close to that of a hammer. The Dow Jones Industrial Average is more so that of a textbook hammer. But again, you can see this long pronounced lower wick around this handle at 2,600. We closed very close to 2,630, but once again, we're tagging this old support area that has held in the past in the month of March, April, and also all the way back to the beginning of February as well. As we're seeing this, you can see also that intraday we push below that rising 200 on the S&P 500. Also, if I bring up these oscillating indicators, you can see once again the Stokes is relatively neutral. The RSI is pretty neutral as well. MACD is absolutely flat. So when we start moving into the Bollinger Bands, because we are in that of a sideways market move, you can see that we're beginning or trying to at least push outside that lower Bollinger Band. But at this current time, we still cannot gain any traction. Now, the top band hasn't turned down, which is also a very nice support level hint that it's going to support. The bottom band has turned down, but if we see a push off from these lows, this band is going to adjust very quickly, and you're going to begin to see this simple moving 18 period begin to turn up as well, which is simply the midpoint of both the top and that lower Bollinger Band as well. So again, a very neutral market. But we are seeing, again, continued bullish signals, even though the markets have been relatively weak, especially for at least over the past 4 trading sessions now, as at the close on Thursday. Now, the only market which, again, has got me a little bit sort of hesitant on an immediate bullish thrust, so to speak, is that of the NASDAQ. The reason for that is because technically we still have a little open window. We got very close to closing it yesterday during Wednesday's session. We actually closed up, I think, 53 or 54 points during 64, there you go, during Wednesday's session. Today, again, really in an inactive day, all right? Tech's really not doing anything. If I go to the weekly chart on Tech, you can see we're down 18 points. Really, it's an inside day candlestick at the moment, and this leads me to believe that this is an inside weekly harami if we do close, or at least if we don't pierce above the high of this candlestick and also the low of this candlestick as well, which is technically a handbrake being pulled on the selling pressure, which is also coinciding at this support area as well on the NASDAQ. Now, what I'm going to do also is recap a couple of individual stocks. I'm going to do another video after I complete this one. Let me just bring up that of the US dollar and gold and silver, because again, we've been sort of stalking this trade for quite some time. And I mean, over the weekend anyway, we had a trigger down here at 90.21 for a reversal. Now, I spoke about this. I said, obviously, it's not going to trigger this week, but we're going to bring this up in due course, because during the recording, we had this shooting star candlestick, and we had the first reversal signal setting up very close to our red rectangular box. Now, these red rectangular boxes, they're not perfect, but they do give us a general sort of vicinity. And if you can see, not only have I said this is a potential turning point, but also the 93 handle all the way up to the 94 handle. Now, what you've seen today is another sort of reversal candlestick. I'm not denying or debating that this is a largely bullish sort of intermediate move, but this is going to be a process upon which the US dollar will ultimately sort of reverse, which is going to be the base for commodity. So as you can see, we've got sort of an inside daily candlestick. We were down 32 cents, and this is beginning to blend with that original shooting star candlestick over here. So we're going to have to monitor this. Tomorrow in pro, or during Saturday, I should say, I'm going to bring this trigger up, and we're going to adjust for not only the session that sort of set up today, but also depending on what happens tomorrow in Friday's session for the US dollar as well. So we're going to continue to bring this up, and this is going to work in conjunction ultimately with bringing down some of these GLD and SLV triggers. Now, GLD actually came on back down, and it tagged our green rectangular box. This is the first time really since we've drawn this green rectangular box. I think we began to draw this in the month of March, if not towards the end of February. But you can see it's the first touch. We also filled the gap on Wednesday, but we got this initial gap up. However, we traded down for the majority of this session. So again, as the US dollar continues to do what it does up and around the current handle, you're going to have to slowly potentially leg into GLD, or you can definitively begin to set bullish triggers at higher prices. What I'll do, depending on the session, as at Friday, I'll begin bringing down 125.74, and I'll speak about this over the weekend. We'll look for some really good sort of entries for swing trades off from the bounce of that trend line, as you can see on my screen. Also multiple areas of support. And if I go out to the weekly chart, this is what's so nice about this. It's a pretty ugly chart, I must admit. Let me see if I can remove some of these annotations again. But really, I want you to pay attention to this handle or this pivot right around. Oh, pardon me, I'm drawing the wrong one. It's actually down here. So very close to where we are currently trading. Mine's, of course, my non-perfect sort of horizontal line, but you get the point. We've both acted as support and resistance multiple times around this handle. It is one of these lines on my charts. The problem is I cannot hide all of them except one. So it's either all of them or none of them, but I just wanted to point that out. I've actually colored it red because of its significance. This is coming in at about 122. So I still believe that GLD is going to fall a little bit lower. But again, I do believe we have limited downside, probably ultimately as low as 121 or 120 if we begin to overshoot this rising trend line, which is going to act as a false whipsaw to the downside. And then if this happens, you're going to see a very quick reversal to the upside on GLD. So there's a little bit happening in the markets, SLV as well. I'd use GLD as my trigger to actually jump into SLV contracts, or really any movement below this low over here. That's going to be a fantastic buy price as well that I'll be paying attention to on silver. So that is the market update on the Dow, the S&P, and the NASDAQ. Really to take away from this is that we're at a pivot once again. The pivot last time held, the pivot back in February held. And again, this market is no doubt weak. However, these signals, especially the candlestick today, although it was rather unchanged, the intraday volatility being, of course, that immediate sell-off to the downside, it was bought and we closed relatively strong. For the last hour or so, we did move sideways, but these are all relatively nice signals. The NASDAQ, however, still has a little bit more to go until we definitively close this gap. We don't have to. We got very close to actually doing it. But again, you can still see we have gaps galore above the NASDAQ, above the Dow, and above the S&P 500 as well. So check back. I'll also go through some individual stocks as well. I wish you very, very well as at this Thursday afternoon market close. If you have any questions, please email me, success@pivotpoint-trading.com. Otherwise, check back in a few moments and there will be some individual stock recaps coming up as well. All the best. Goodbye.